Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the Federal Reserve's interest rate decision, the non-farm payrolls report, and the potential trading opportunities that will come about as a result. My name is Sasha and I'm a financial analyst from the research department at 4Trade. I'm really pleased that more people are watching our webinars, and if you have any questions, I will do my best to answer them. Or please call us and ask to speak to a senior account manager who will be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now we would like to present our new offer that is exclusive to those watching this webinar. To use this special offer, a code will appear on your screen during the webinar, which I will repeat at the end of this webinar, that you can use to take advantage of our special offer. Be aware that this offer will expire in 24 hours and that this new offer applies to all of you, not just second-time depositors. If you make a deposit within the next 24 hours, you will receive a balance bonus. If you deposit 1,000 euros, you will receive a 2% balance bonus. If you deposit 2,500 euros, you will receive a 4% balance bonus. Deposit 5,000 euros and receive a 5% balance bonus. Deposit from 5,000 to 15,000 euros and your overnight interest rate will be covered for 1 month. Deposit 15,000 to 25,000 and your overnight interest rate will be covered for 2 months. Deposit 25,000 or more and your interest rate will be covered for 3 months. You are free, of course, to use this offer however you choose. But let's talk about market opportunities. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis, according to market conditions and based on historical evidence. They can relate to daily trading, weekly trading, or monthly trading. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point, support and resistance levels. It's important to understand that it's solely your decision whether you trade on market opportunities or not. So here is an example of a live market opportunity published yesterday. Here you can see fundamental analysis on what's going on with the British pound and a US dollar currency pair. As you can see, this is an uptrend opportunity. Over a weekly period, since our analysis suggests the pound will grow in value against the dollar. Here you can see some geopolitical events and fundamental analysis that can influence the euro-dollar currency pair. For example, this part stating that there is a fair chance that the Bank of England may increase interest rates by 0.25% is important to note. Of course, since the Federal Reserve isn't expected to increase interest rates, there isn't anything about that. It's important to look at the pivot point on which the calculations are based. If the price reaches 1.3154 that you can see on the screen here, this shows the right moment in our estimation for you to come in and open a trading position. You can see below the trend direction and the time period, which is up, and the time period is a weekly basis. You have support and resistance levels here down below because it's important to know how to use the stop loss and take profit options. At these points, you can put a stop loss and take profit. And further down, you have calculations. Down here. If you close the position using take profit, you can expect these kinds of profits at these resistance levels on the left-hand side here. If the price is going against you, then you can potentially have a loss of this amount at these support levels here. Finally, profit and loss calculations are based on a one-lot trading volume. The point is that our market opportunity is a great opportunity to trade on the markets. So what is the Fed and the Federal Open Market Committee? I will first start by explaining what the Fed does. As we all know, the Federal Reserve is the central banking system of the United States that implements monetary policy. The chair of the FOMC and the Fed is Janet Yellen, and her current mandate ends in February 2018, although she is seeking reappointment. A body for which us is most important is the Federal Open Market Committee, the FOMC, as this is the body that makes the important decisions on monetary policy by raising or lowering its target for the federal funds rate. That is the interest rate for overnight borrowing between banks that has a great impact on the price of the dollar. So, the Federal Reserve. The Federal Reserve's mandate is a dual one: to keep inflation below or close to 2% and to create jobs. And it's doing it with monetary policy, that is primarily setting interest rates. You can see on this table how the Fed has kept interest rates historically low as monetary medicine to kickstart the economy following the financial crisis. Jobs then are considered an important factor when deciding to hike rates or not. The non-farm payrolls report is the main jobs data during a trading month, so the NFP is crucial for the Fed's decision. When the NFP is released, the whole forex market moves, and traders see aggressive spikes or dips on all currency pairs. This says a lot about its importance, and here are some things that make this release so critical for the forex dashboard. The non-farm payrolls report is the release of data on US jobs growth over the previous month, published by the Bureau of Labor Statistics, usually on the first Friday of the month following the data. It's without any doubt the most eagerly awaited monthly data by world markets. Morning trading volumes are usually slim in European markets on the day of the release, as they await the afternoon release time. The headline number in the report gives the number of jobs that the US economy has gained or lost in the previous month. A more important number for the markets, however, is the difference between the actual change and the consensus of estimates by analysts and economists published in advance. Market reaction will depend on whether the published figure is above or below the consensus, and by how much. As well as new data, the publication also includes revisions to the previous 2 months. Some revisions are more substantial in either direction, calling into question the wisdom of any significant market reaction based on a single figure. The NFP release comes together with the unemployment rate indicator on the first Friday of every month. When this is due, the trading week is a ranging one for the forex market. And after the release, traders start positioning for the next time the Fed meets to see how the monetary policy changes in the meantime and how to react. The NFP is traded heavily by algorithms, trading machines, robots, supercomputers that buy and sell hundreds of trades per second. Because of that, fake moves are common. When the actual number differs from the forecasted one, the market travels. Traders usually try to position for the NFP in advance, looking for clues from other economic data, like an ADP report or private payrolls. It is believed that private payrolls and the NFP data are linked in a directly correlated fashion, But this isn't always the case. The unemployment rate is part of the Fed's decision-making process to move on rates too. Much of the time, a lower unemployment rate is better for the economy as jobs are created, and this will result in the Fed hiking rates. Higher rates lead to a higher dollar as traders will buy it. There is no such thing as full employment in an economy. Experienced traders know that by the time the unemployment rate has fallen to below 4%, a labor shortage has already appeared. Forex trading is about anticipating what the central bank is going to do with interest rates at the next meeting, and the NFP is the perfect economic release to position on the right side of the market. So what happened as a result of the previous NFP and Fed meetings? Well, the previous NFP report was published on October the 6th. October's report showed a disappointing loss of 33,000 jobs, compared to the forecasted number of 90,000 new jobs. Analysts believe that Hurricanes Harvey and Maria were mostly to blame, causing business owners to stop hiring. In a mixed day's trading following the publication of October's NFP, however, the release of very positive unemployment figures showing a fall from the previous month's 4.4% to 4% caused the dollar to climb 0.34% before finishing 0.58% down by the end of the day. As we can see here, the euro-dollar initially fell by 0.38% before climbing 0.62%. The previous Fed meeting was on September the 20th. At the last meeting, as expected, on September the 20th, the Fed decided to keep interest rates at the current value of 1.25%. As a result, the dollar index, as you can see here, responded with an increase of 1.16% before falling back. The euro-dollar went down by 1.48% as traders decided that they felt an interest rate rise for the dollar was on the horizon. So what can we expect now? Well, the NFP figures will be released on November the 3rd, and economists are predicting that 300,000 new jobs were created over the past month. An outstanding result, and if accurate, this will be the highest monthly figure since November 2015. A higher number of those employed tends to influence inflation to increase. Many traders expect an interest rate hike in December, and are supported by the publication of the minutes of September's FOMC meeting earlier this month, stating that, quote, another increase in the target range later this year is likely to be warranted if the current outlook remains broadly unchanged. However, the current target rate probabilities show that it's highly unlikely that there will be any change in interest rates this month, though, showing a 98.5% probability that interest rates will remain at their current level. As far as average hourly earnings are concerned, it's a very important indicator since consumer spending is likely to rise when it increases. And if consumer spending rises, this increases the rate of inflation. Average hourly earnings has been steadily increasing this year, as you can see on this table. One of the main factors causing the FOMC to delay raising rates has been the rate of inflation that has been below the 2% target. Personal consumption expenditure, or PCE, which measures prices paid by consumers for goods and services, has remained low and has been the main problem in keeping the inflation rate off target. But although the other main indicator, Core Consumer Price Index, CPI, is still under the 2% target and is currently 1.7%, it is expected that next month's figure will be 1.8%. October's annual inflation rate of 2.2%, however, is above target and supports an interest rate rise. Traders have factored this information into the valuation of the dollar, which is one reason why the dollar has grown recently. However, with interest rates still at very low levels, economic growth and borrowing is still being encouraged, which usually helps stock prices to rise. Nevertheless, positive economic indicators, a prospect of an interest rate rise this year, and speculation that there may be a number of rate hikes next year is giving the dollar strength. Traders will be looking for a clearer signal from the Fed on whether rates will be increased in December. In case you missed the promo code during the presentation, this is your last opportunity to take advantage of our special offer, which lasts for 24 hours. The promo code is FEDFX. Again, we feel that it's a great option to use our special offer either on this event to trade or on a market opportunity, but the choice is yours. Of course, at ForeTrade, we will be following developments related to the Fed's decision and the NFP results for what we expect will be a very busy week's trading. Please get in touch with your senior account manager for any further information. On Tuesday, 7th of November, I'll be presenting the basics of fundamental analysis, so please sign up for that webinar. Until then, goodbye, and please join us at ForeTrade again soon.